All right, future CPAs, welcome. We're about to tackle some cost accounting topics that can be, let's be real, a little tricky. But don't worry, this whole explainer is designed to be a brain hack, something to make these concepts really stick. So when you see them on the LECPA, you're not just going to remember them, you're going to get them.
Okay, so you have probably spent a ton of time, right? Grinding through job order and process costing. You feel like you've got it down. But what if I told you that's not the whole story? I mean, what happens when a company doesn't fit perfectly into one of those two molds? Yeah, those are the curveballs the LECPA loves to throw, and that is exactly what we are getting into today.
So let's go beyond the basics. Think of what we're about to do as upgrading your mental toolkit. We're adding two super powerful modern costing methods that are going to give you a serious edge, not just on the exam, but out in the real world too. First up, upgrade number 1, the value stream. Now listen, this is more than just learning a new formula. This is a total mindset shift. It's a whole new way of looking at how a company actually operates. We're talking lean accounting.
So what is lean accounting? Here's the main idea, and it's actually pretty brilliant. Instead of getting totally lost in the weeds trying to track the cost of one single product, lean accounting basically says, hey, forget that. Let's look at the big picture. Let's cost the entire process, from the moment the raw materials come in the door to the second a finished product goes out. That whole flow, that's the value stream. And the whole point is to find and totally eliminate anything that adds cost without adding any real value.
And this right here really shows you that mindset shift I was talking about. You see, with traditional costing, it's all about one thing, the individual product. We obsess over allocating every little bit of overhead to every single unit. It gets super complex, you've got all this work in process to track, it's a headache. Lean accounting just tosses all that out. It says, let's just focus on the cost of the entire flow. This makes things so much simpler, and suddenly all that waste becomes impossible to ignore.
Okay, check out this example from Alston Company. It makes it so clear. The old way? They'd be trying to track costs for 4 separate models, A, B, C, and D. Imagine the paperwork. It's just a mess. But with a lean approach, they just simplify. They group them into 2 value streams. You've got your purses stream and your wallet stream. And boom, just like that, they can see which entire line of business is actually making money and where the real costs are hiding. It's so much smarter.
And that's the whole point, right? When you look at the entire stream, you can't miss the waste. All that money getting poured down the drain on things like fixing mistakes, reworks, or paying rent for a corner of the warehouse that's just collecting dust. These are what we call non-value added costs. And the beauty of lean is that it makes them impossible to hide. It basically shines a giant floodlight on them so management can go in and cut them out, making the whole operation leaner and more profitable. Okay, but what about those companies that are kind of stuck in the middle? They're not making one-off custom jobs, but they're not mass-producing millions of identical things either. What do? Well, for them, we need our second upgrade. It's the hybrid solution, and it's called operation costing.
Just think of operation costing as the best of both worlds approach. It's perfect for companies that make stuff in batches. So imagine a batch of products. They all go through the exact same process, the same steps. But, and this is the key, each batch might use totally different materials. So you see, it's a blend. It's a mix of job order costing and process costing.
And the way it works is actually super simple when you break it down. First, you take the job costing part. For the direct materials, since they're unique to each batch, you trace their cost directly to that specific batch. Simple enough. Then you grab the process costing part. For the conversion costs, labor and overhead, you just calculate an average cost for each department because every unit goes through the same process. And then you just combine them. Add the specific material cost to the average conversion costs and you've got your total cost for the batch. See? A perfect mix.
Let's make this real with the Orville Knitters example. Look at the direct materials line. Order 545 has a completely different material cost than Order 567. That's the job costing piece right there. Each batch's materials are tracked separately. But now look at the conversion costs. Both orders went through Department 1, so they both get a piece of that department's cost. But then, they took different paths. Order 545 went on to Department 3, while Order 567 went through Department 2 instead. So their conversion costs are based on the specific process each batch followed. It's that hybrid system in action.
Okay, so we've gone through the what and the how. Now, for the really crucial part. How do we make sure this stuff is locked and loaded in your brain for exam day? It's time for the LCPA Brain Hacks. Think of this as your cheat sheet for the exam. This is your decision tree. When you're reading a problem on the LCPA, you need to be a detective looking for clues. If you see words like just-in-time, efficiency, waste reduction, or continuous flow, your brain should immediately scream lean. But if the problem talks about making stuff in batches, with similar products that share a process but use different materials, ding, 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 you know that's your cue for operation costing.
And if you remember absolutely nothing else from this entire explainer, please remember this slide. This is your ultimate brain hack. It's this simple. Lean is about the flow. We're costing the entire value stream, the flow. And operation is about the mix. We're mixing job costing for materials with process costing for conversion. Say it with me. Lean is flow. Operation is mix. Just burn that into your brain. It'll save you on the exam, I promise.
All right, let's do one final rapid-fire review to make sure this is all completely cemented in your mind. This is the stuff that you absolutely have to walk away with. Okay, this is your screenshot moment. Seriously, pull out your phone. Got it? Good. So remember, lean accounting costs the whole value stream, not single products. Why? To find and kill non-value-added costs. Operation costing, it's that hybrid system. You trace direct materials to the batch, but you average conversion costs by department. And for the exam, your triggers for lean are things like JIT and value streams. For operation, look for batches and different materials. This slide right here, this is your key to unlocking those points on the exam. So I'll leave you with this question to think about. As you're going about your day, look around. Think about the company that made your phone, or the place that made your coffee, or the brand of shoes you're wearing. Which ones do you think are using lean, focusing on that flow? And which ones are probably using operation costing with that mix of materials and processes? You know, the best way to make this stuff stick for good is to see it in the world around you. So keep thinking, keep connecting the dots, and you are absolutely going to crush that exam. You got this.